What's up, everyone? It's Scotty with MoneyVest. So I literally am re-recording my entire freaking Tesla video because my microphone, my stupid microphone, was turned off. But hope you guys enjoyed. In this video, I'm going to break down the catalyst that resulted in Tesla's 7% rally. We're going to talk a little bit about the average cost basis for all investors out there for Tesla and how investors are buying Tesla right now hand over fist because that cost basis that we've been tracking has moved up from low 100s to now in the mid 200s. So we'll talk about that as well. I'll go over exactly what I'm planning to do with my biggest position, which is Tesla, and of course go over the technical analysis as well. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. I would really appreciate it because like I said, I'm re-recording this entire video. Subscribe to the channel if you haven't already. And again, link to our Discord and Patreon is going to be down below. There is a 16% annual discount available for the next 2 days. So today and tomorrow, that's available. You get access to all the members only benefits, buy and sell alerts, options alerts, trade ideas, all that stuff. And this right here, again, is our fundamental and technical analysis courses, as well as options course that is currently 50 to 60% off. And the coupon code is going to be LABOR4 if you're interested in enrolling. And again, this is also valid for the next few days with limited spots available for this as well. So link's going to be down below for this as well. So going over to Tesla. And Tesla had a massive rally yesterday, as we know, up over 7.6% to $257 per share, down about 0.5%, close to 1% pre-market, trading just at 255. I took advantage of this rally and actually ended up selling a call on Tesla. 325 strike November is the expiration, and I'll go over exactly why I picked that strike specifically. But nonetheless, again, the premiums were very juicy, so I actually got paid a little bit over $5.75, almost $6 per contract for that option, right? So that's a pretty good yield in my opinion. Return on collateral was, again, the cost basis. So the way you calculate return on collateral on options by selling covered calls is basically taking the premium divided by the cost basis to figure out what that actual return on collateral is going to end up looking like. So for me, 575 basically yielded about a 3 to 4%, 3.5%, close to that number in terms of that return on collateral. So it made sense. And the delta, which is just the probability of that option expiring in the money, out of the money, and also pretty much tells us how the price of the options will change depending on the underlying stock price, was also less than 0.2. Now, if you don't understand all these things that I'm talking about, please make sure that you do learn and brush up on options. I've got several tutorials, in our Patreon going over options, going over these specific strategies. And of course, you can also access the options course, which goes over all those things as well, from beginner friendly videos all the way to advanced strategies, going over selling covered calls, selling put options, straddles, strangles. We also go over a lot of different strategies in those courses. But nonetheless, again, I'll go over why I picked that strike, not only for the delta, but there's also a resistance that's sitting right there at 315 for Tesla. But nonetheless, BYD reporting some very good numbers here. Deliveries and profits more than triple in the first half of the year. And that obviously is a big catalyst for Tesla as well, because Tesla operates in China and Giga Shanghai can produce up to almost over 1 million vehicles per year. And this right here is another catalyst that basically had recent data revealing that insured registrations for Tesla vehicles in China reached over 17,000 units in the reporting week. And this encouraging trend sets the stage for the company to potentially surpass a second quarter record of 156,700 units in the third quarter as well, which again is going to be China specific deliveries. And we know that Tesla's looking at delivering close to 1.8, close to 2 million vehicles this year, which is going to help them achieve their 50% compounded annual growth rate target for deliveries. And of course, eventually we want to see them deliver 10, 20, 30 million vehicles per year in order to get to that $4 to $5 trillion market cap. Speaking of market cap, it is sitting at over 800 billion again, almost up to $1 trillion. We still have a little bit of ways to go. And going over some average cost basis, investors have been buying shares of Tesla hand over fist. And how do I know that? Because I've been tracking the average cost for all Tesla shareholders, all investors put together. So that's really cool that Webull does this, is that basically take into account all the 13 exchanges and figure out what the average cost basis is for that particular stock. And right now it's sitting at $244 for Tesla. And we've tracked this number from like low 100s to mid 100s to low 200s, and now we're sitting at 244. So investors are buying. Investors are in fact buying at higher prices. And as the price is going higher, there's more momentum, there's more sentiment. And that's what happens, right? This is one of the best metrics to really understand how recency bias plays a significant role, because you will never see average cost basis go down, because when prices are going down, people don't want to buy. When prices are going higher, that's when people are interested in up buying more, and that's how average cost basis overall starts to move higher as the price is going higher. And again, it's more psychological, it's more about the recency bias, but nonetheless, 64% of shareholders right now are profitable because again, the average cost basis is 244, the market price is 257. So that's a pretty good metric, but again, we've seen this number come down to 4%, 5%. We've seen this number at over 90%. Again, you're going to see this number over 90% when Tesla is trading at all-time highs. Now, going over why 325 on one of the contracts, again, I do have a pretty significant and sizable position. It is my biggest position in the portfolio, so I don't mind de-risking a little bit and trimming some Tesla shares away at a huge profit, so I can, again, reallocate that capital over to better opportunities, more undervalued opportunities. Now, this right here is the technical analysis. So there's 3 resistances that are perfectly lining up for a Tesla that I wanted to go over. First of all, we've seen a very nice breakout from this potential resistance here. So old support potentially acting as a resistance. So we struggled at that level. As I mentioned, one day we're red, another day we're green. So red, green, and then a huge breakout yesterday on over 130 million shares worth of volume. And now the next resistance, first of all, is going to be this lower high. So this right here is going to be that resistance level to watch for Tesla at around $295 per share. That's pretty much the widening wedge that's been following us since 2021. So it's been the longest lasting trend for Tesla. You'll notice that we have gone rejected at that level, like literally not once, but like twice, 3 times, 4 times. This right here was the 4th time we got rejected. And again, we are pretty much at those levels, or are really going to be approaching those levels again at around $290, $292. If that resistance doesn't do it, right, the next resistance for Tesla is going to be 312. So that's going to be that red line you guys see on the chart right there. And that's a resistance from back in August and September of 2022. We got rejected there not once, not twice, but 3 times. So triple top there for Tesla. Then of course we started selling off pretty aggressively after the Jackson Hole Economic Symposium, and the markets absolutely got crushed. So that right there is going to be that next resistance. If that doesn't do it, we've got another resistance inside this uptrending channel within the higher highs and higher low, the context. So that's pretty good because Tesla is in this very nice uptrend. And it is making these higher highs and higher lows. So a very nice rally here, pulled back, a very nice rally here, pulled back. And if you do see another one of those rallies here, so that's going to be that green line inside this higher high, that's going to be sitting at 330s. So the probability for Tesla to get up to over 320s, 330s is good because Tesla is Tesla. At the end of the day, I mean, 27-28% rally is nothing. It's like a walk in the park for Tesla if it really wanted to. And the momentum is going to be strong. The volume is going to be strong. But at the same time, there are not 1, not 2, but 3 potential resistances sitting at above $300 or close to $300. So 290, 300, and 330s. So those are some of the reasons why I actually picked 325. I actually am going to be okay with selling Tesla at those levels because my cost base is a lot lower than where the price is, and of course much lower than where the aggregate cost basis is. So I don't mind kind of de-risking a little bit and getting rid of some of the shares so I can once again allocate capital at other opportunities. Now my fair value is still going to be at 150, so you guys already know. So this right here is going to be my intrinsic value on Tesla. And again, there's over 7,000 stocks out there, so it doesn't really matter if my intrinsic value is lower because I can look at other opportunities and wait for the prices to come to us. That's been our mantra on the channel, and I'm never going to be compromising on that, right? So regardless of what I know some people think that fair values are a lot lower, that's where it is. If you want to take it, take it. If you don't, pay whatever you want for that price. But that's where I believe that Tesla is going to be a really good deal at close to $150. So if and when it gets down there, I'm happy to DCA, I'm happy to buy more. If it doesn't, I'm happy to sell calls and take advantage of that profitability. But that's really the resistance that we need to watch. So hope you guys enjoyed this video and a quick update on Tesla. Let me know your thoughts down in the comment section below. And I really hope that this video recorded well and the audio was there. And again, don't forget fundamental tech analysis courses as well as options course currently 50 to 60% off, coupon code LABOR4. And the Patreon Discord also 16% available on an annual basis until August 31st. So as always, happy investing. I'll see you all in the next video.